watching Market Cafe with me, Shreyanshi Singh, and over the next 1 hour, me and Priyanka Uppal will be taking you through news and updates from within the country as well as across the globe. Also tell you which stocks you should be watching out for and tell you what the brokerages are saying as well. But well, first things first, let's take a look at the US markets and see what they did really in trade. The S&P 500 was the one that rose about 0.4%, even when you take a look at the nasdaq composite. Added 0.5%, marked the third winning session in a row. For these two indexes, you did have the Dow that underperformed just a tad bit, dipping roughly 0.3%. So a shade lower is where Dow was also at, but all three major averages then are on track to finish the week with modest gains. So when you take a look at the S&P 500, on pace for a 0.7% advance coming in, while the Nasdaq is the one that is tracking for an 0.8% jump during the period, as you can see on your screens as well. The Dow's the one that's lagging with a week-to-date climb of just about 0.5% thereabout. And stocks, in fact, what's key to note is that have managed to rebound from Monday's sell-off, which came after President Donald Trump over the weekend announced 10% tariffs on China then. And he also agreed to pause 25% when it comes to levies on Canada and Mexico. So that's very important to note. In terms of the tariff announcements that he's been making, that is going to be something that's largely going to be in focus when it comes to Trump 2.0. Was the highlight of the week, at least in the start of the week. But there's been a recovery ever since that announcement was made, and traders' focus now is going to be moving towards January's job report. That is something that we're looking out for, and that is slated for release on Friday, Priyanka. So that is definitely something that we're watching out for.
Absolutely. Morning. So US markets looks advancing they are on a pace for a winning week. But then talking about foil, that one was in choppy trade, and especially the kind of repeat pledges to lower the prices, what is coming in from US President Donald Trump. But oil, that one settled on Thursday, especially when Donald Trump pledged to raise a US oil production. That one unwavered the traders, and what we saw that Brent crude futures also fell by 32 cents, nearly 0.4%, to settle at $74.29 per barrel. And even you talk about WTI, that one also fell by 42 cents, nearly 0.6%, to settle at $70.61. So that was majorly on the oil. And we've seen that oil has been trading at a 1 month low level. Now the lower levels, what we saw is ever since January 15, but it has also dipped in to a level as low as the 1 month low, which was which was trading at January 2nd. So right now, of course, these are the cues that we're getting from oil at the moment.
Well, absolutely. There's just a lot to watch out for when it comes to crude, because there's stockpiles that are going to be in focus along with tariff wars and commentary coming in around that. But let's also take a look at what are the other key events to watch. Then from India, you do have the RBI MPC meet outcome. That's been something that we've been watching out for all through this week, and that's going to be in focus in just a few hours from now. And from the US, of course, there's non-farm payrolls data, unemployment data as well, and from China there's forex reserves data as well. In terms of earnings, then on the earnings front, you have M&M. That's the one to watch out for from the Nifty pack. And other than that, in terms of other corporate action, then there's Edelweiss Financial Services board that will be mulling fundraise. And other than that, there's the AGM also when it comes to this particular counter. So that counter, Priyanka, is definitely going to remain in focus.
Absolutely. So these were the key events to watch out for. But let's get you some more important global story. Let's kickstart with news flow straight away coming in from United Kingdom, where the Bank of England has made its first rate cut of this year. Now, this signals that further credit policy ease is coming. This comes as the central bank downgraded UK's growth forecast for the year. BOE has lowered rates by 25 basis points, and as per the data, the economy flattened in the third quarter. While weak retail data last month also added to expectations that the bank would cut rates, Britain's inflation rate, meanwhile, fell to a lower than expected 2.5% in the month of December, with core price growth slowing further, also fueling expectation that central bank policymakers would steer towards their first trim of 2025. Nonetheless, Governor Bailey emphasized that a gradual and a careful approach to the further withdrawal of the monetary policy restraint is appropriate.
All right, then moving on, the number of Americans filing new applications when it comes to unemployment benefits increased moderately last week, consistent with steadily easing labor market conditions. Then, though opportunities for those out of work are becoming scarce amid tepid hiring. So that's the kind of trend that you're seeing emerge when it comes to the weekly jobless claims, and weekly jobless claims increased 11,000 to 219,000. Meanwhile, when you take a look at productivity, That grew at 1.2%. That's the kind of rate that you're looking at in the fourth quarter then.
Okay, in the meantime, Dallas Federal Reserve Bank President Lori Logan, that one also signaled that she was ready to keep interest rates on hold for quite some time, even if the inflation drops closer to the Fed's 2% goal, as long as the labor market does not falter. She said she would view the combination of slowing inflation and a strong labor market as evidence that monetary policy was not meaningfully restrictive. In addition, she said that if the labor market or even the demand cools further, that could be an evidence that it's time to ease out.
Well, absolutely. Let's keep it going with the US. Then American industrial conglomerate Honeywell is the one that said that it will separate into 3 independently listed companies. Now, it had announced the spin-off of its advanced material unit, and that is the one now they're going to be separating their aerospace and automations units as well. This move, of course, comes after activist investor Elliott Management acquires stake worth $5 billion in the company. So that's an important announcement as far as Honeywell then is concerned.
All right, in the meantime, the key news to track today would be all eyes on the RBI MPC meet outcome. Is RBI going to make a rate cut today or not? What is Street expecting? That is the central bank cutting rate. That's majorly what is being priced in is that 25 BPS rate is coming. Gaurav is standing by to tell us more about what the Street is expecting actually.
Well, yes, MPC meeting will conclude on Friday, and when it comes to MPC meeting's outcome, now the much awaited rate cut might happen in this meeting of around 25 basis point, and it's not just us. Around 72% of the economists believe that RBI will go ahead with the rate cut, and there are several reasons why they believe that rate cuts may happen. The first is India's GDP growth. So when we look at the trajectory of India's GDP growth, for the last 2 quarters, the GDP growth has been slower than what the street was expecting. In fact, in the last quarter, which was Q2, the growth came at around 5.4% versus what it was estimated at 6.5%. So earlier RBI was focusing more on inflation, but in this meeting they believe that RBI may focus more on bringing back the growth, and that is the reason why they believe rate cuts will happen. Second is the system liquidity. Now when we look at this number, system liquidity is at a deficit of around 3.1 trillion rupees, and when we look at RBI, we have already seen RBI taking strict actions to bring back some of the liquidity. We have already seen RBI doing some of the activities like OMO, VRR to infuse around 1.5 trillion rupees in liquidity. We have also seen RBI cutting their CRR rates in the last meeting by 50 basis points. Now, although CRR rates are back to where it was earlier, there are no expectation that CRR rates may get cut from here on. But apart from that, RBI seems to be back in action when it comes to liquidity, and that is the reason why rate cuts may happen. Third is inflation. When we look at this number, it was actually higher than expected. In fact, food inflation was something which was stressing it out. But when we look at core inflation, it was well below the 4% mark where RBI wants inflation to remain for India. Lastly, when we look at food inflation, now brokerages believe that from here on inflation will ease off. In fact, brokerage like BOFA believes that in the month of January, we may see inflation reaching around 4.4% level, which is much lower than what we have seen earlier. And we have also seen government actually pushing the consumption. In fact, in this budget, they have been very clear about consumption push, and this is something which is also pushing the expectations around RBI's rate cut. When we look at RBI's another expectation and any of the projections, we have already seen RBI has cut down their growth estimations and also increased their inflation estimations in the last meeting. So we're not expecting any kind of changes there, but at the same time, any kind of commentary on the global macro events and any kind of commentary on from newly appointed governor Mr. Sanjay Malhotra is going to be a key thing to watch out for. But when it comes to rate cut, now street is expecting some kind of rate cut around 25 basis point in this meeting.
Alright, then there you go. Those are the kind of expectations that we have when it comes to the MPC meet outcome, as well as the power pack lineup that we also have for you to decode that outcome as well. But time for a very quick breather on the show. When we come back, we take a look at how the Asian markets are faring, so don't go anywhere.
Welcome back. You're watching Market Cafe on ET now. Now let's get your cues from the Asian market. Asian market, which looks like they've opened with a mixed set of cues. In fact, rather opened lower only. Not much of the economic data to track. Majorly, the cues would come from the RBI MPC, which the Asian market will also closely track, and then the Japan's household spending data, which is on the tap. Right now, Nikkei. That one is, though it started with a positive start, but has slipped to the red mark again now. 0.26% of 0.2.6% of cut coming on Nikkei at the moment. And in fact, it started with a soft start only. Topics also traded with a soft start. It traded 0.32% lower when it started. Household spending data, which is on the tap, and for the month of December also, that spending data rose on a year-on-year basis to 2.7% mark, even on a quarter-on-quarter basis, and that was far ahead of the expectation. So all eyes are on this economic data, and that's what actually is building up, is weighing on the markets there. Kospi, on the other hand, South Korea's Kospi, that one is also trading with a negative bias right now. It has shed around about 0.26%, while the small cap index is trading lower. But Hang Seng is trading with a positive start today with the 0.4% of uptick coming on Hang Seng. Shanghai also trading with a uptick bias at the moment. 0.2% is the gains what is coming on the index at the moment, and even Australian index is also trading with a positive bias. So mixed set of cues coming in, wherein the Japanese market is majorly trading lower, South Korean market is trading lower, but Hang Seng, China, and even GIFT Nifty is indicating a positive start. Maybe we are up for a gap up of a minor point, but 20 points up. That's what above 23,700 is what GIFT Nifty is indicating at the moment. So a mixed set of cues, Shriyansi, coming in.
Well, absolutely, and let's really see how that pans out for us. But welcome back. Thank you so much for staying tuned in. Well, time now to get you some more news and updates, and it's Zomato that's going to be in focus because it is ready to undergo a name change to change the company's stock ticker name to Eternal from Zomato. In fact, Sumita Curry is standing by with those important details. Sumita, tell us a little more about this rebranding exercise. What about the core businesses? Are they going to remain the same? Tell us a little more then.
Food tech major Zomato has changed its name from Zomato Limited to Eternal Limited, and the company has communicated in a stock filing. Now remember, the company has been using the name Eternal internally within the company for nearly 2 years now, but today they communicated the same. In fact, the company has also communicated that they've gotten the approval of the board of directors. Now shareholder approval is awaited. In fact, in the stock filing, the company says, and I quote, "When we acquired Blinkit, we started using Eternal instead of Zomato internally to distinguish between the company and the brand or the app. We thought that we would publicly rename the company to Eternal the day something beyond Zomato became a significant driver of our future. Today with Blinkit, I feel we are there. We would like to rename Zomato Limited, the company, not the brand or the app, to Eternal Limited." So just to be sure and just to reiterate the same, Zomato says that they would like to rename Zomato Limited, that is the company, to Eternal, and it's not the app or other brand. And now the business, which is called Eternal Limited, it will encompass all of Zomato's businesses, that is Blinkit, Hyperpure, District, and of course the food delivery arm. In fact, Dipinder Goyal has also written a letter to shareholders, and he says, talking about the name, that Eternal is a powerful name, and to be honest, it scares me to my core. It's a tall order to live up to because Eternal carries both a promise and a paradox. This isn't just a name, it is a mission statement, a reminder etched into our identity that we will endure, not because we are here, but because we need to get there. Now, the change in the name comes in at a very interesting time when there is, of course, an influx of very many quick commerce companies. There is intensifying competition in the delivery space as well. So the new change, name change, will get reflected on the stock ticker.
Thanks very much, Sumita. Looks like a strong ethos coming in behind their entire renaming exercise. But we did try to gather some more reactions on it. In fact, we did caught up with Rahul Jain, who's the VP Research for Daulat Capital, to get his perspective on the entire renaming exercise. Let's go across and listen to what he had to say.
The quick commerce business itself is currently 80% the size in terms of GOV compared to Zomato, and even the hyper pure business and the going out business itself are emerging to be a big opportunity within the ecosystem. So those are the things for which the brand and the company name has to be differentiated and represent the holistic opportunity rather than representing only one part of the business. And we know that they have invested big even in the district business when they acquired the assets and IPs from Paytm. So I'm sure going out itself could be a big business in itself. So it makes a lot of sense as a logical extension to have a name which is far wider in terms of representation rather than one part of the business alone.
Alright, then that's about Zomato then. But moving on, in an exclusive chat with Media Secretary S. Krishnan talks about India's AI mission and what kind of AI model India is going to be focusing on. In fact, he also touches upon issues when it comes to DeepSeek. Let's go across and listen in to what he then exactly had to say.
You see, India, there was an internal debate. I think all of you are well aware that there was a debate on whether India should focus on building a foundation model of its own, or whether it should just build applications on existing open source models and go ahead. Somewhere we felt that we needed to do both, but we allowed the debate to really take place before we took a final call. And I think we have been vindicated in the stand that we need to do both. And even in terms of costs, the fact that the costs have come down substantially, and that is possibly what the DeepSeek example from China actually establishes, that it should be possible for us to train and build a model of our own at relatively reasonable costs. That is something which is now clear. It's also important that we build the model based on Indian ground-up data. A model is only as good as the data that it's trained on, and you have to capture the cultural nuances and all other aspects of what happens in India for a model to really reflect an Indian sort of ethos in it. So I think that is one reason why it is very important that we build a model ground up for India. Okay. At the same time, I think it's also important that we don't close ourselves to what is happening elsewhere in the world. And there's nothing which stops us from using open source models or even other models on a paid basis to actually build AI applications which can be used in India.
Right. So, because we're talking about AI, and of course, there's a lot that's happening in China with respect to DeepSeek. What is your biggest concern with respect to DeepSeek?
The biggest concern is that if you use it based on what they offer on the portal or what they offer on an app, then the data does go to China. And it depends on how much you upload into that, right? I mean, if you upload a lot of Indian data or a lot of elements of Indian data, there could potentially be a risk of a lot of data flow into China. That is a concern. Now, on the other hand, if you host it in India, to some extent that risk is mitigated. We are examining that issue also technically to figure out whether indeed the data doesn't go to China if it is hosted out of servers in India.
Okay, that's an interesting conversation coming up. Just heard the India's digital take on DeepSeek and the artificial intelligence. With this, we stay for a short break here. When we come back, we get you the cues for today, even from the derivative space and the buzzing stocks.
Welcome back. Time now to get you some more news and updates. And Ansh is standing by, in fact, for the futures and options roundup. Ansh, over to you.
Right, so starting with Nifty first, Nifty declined for second consecutive session, but the good part is that it found some good support at around that 23,550 level, which was the breakout level as well. Also in index options, we are seeing most active call writing happening directly at that psychological level of 24,000, indicating that option traders are expecting strong resistance around this level. Here also the good part is that the resistance which traders are expecting is far below from its current market price. If we talk about Nifty Bank, the Nifty Bank has touched its 1 month high level, closing almost near flat level, but sustaining above that 50,000 mark is also a positive sign. In index future, we are seeing that open interest has gone down by around 2.2%, indicating short covering, which is also a positive sign. Whereas if we talk about FI position in index future, then we are seeing that they have covered their long position by around 3,700 contracts. They have added some short as well by around 3,000 contracts. So net to net, we are seeing a reduction of around 6,700 contracts, due to which we are seeing that they are getting a bit cautious here. Whereas on the downside, if we see clients, then they have added 6,000 long contract. They have covered some shorts as well. So almost we are seeing that they have added around 7,000 contract on upside. But if you talk about FI position of last 4-5 sessions, then we are seeing that they have been hovering around that 20%, indicating they are getting comfortable in this range.
Outlook from the FIs looked a little bearish now, as if the contracts have added index future. Their positioning was added 2 days back, but then maybe the view has changed and it keeps changing day by day. Thanks very much, Ansh, for that roundup on the derivative side. Well, let's get you the stocks that could be buzzing in trade today on the back of the earnings and the other news flow. Ria is here. Ria, morning.
Good morning. Let's take a look at the stocks that are going to be in focus today. A lot of stocks are in focus on the back of their Q3 numbers. First up is NCC. The revenue has gone up marginally, but on the net profit side, we've seen a decline of almost 13% on a year-on-year basis. Even the EBITDA has declined by 13%, and the margins are down by 136 basis points, coming in at 8.2% in this quarter. Sonata Software as well, the revenue has gone up around 31% on a sequential basis, but the EBIT has declined by 9%, and the net profit is also down just about 1.5% in this quarter. Coming to Motherson Wiring, the revenue has gone up just about 9% on a year-on-year basis, but if you look at the profitability, net profit has declined by almost 17% over the previous year. EBITDA is also down by around 9%, and the margins have also seen a very steep decline of 206 basis points, coming in at just about 10.3% in this quarter. Apollo Tyres, the revenue is up just about 5%, but the net profit has seen a very sharp cut of 32% on a year-on-year basis. Even the EBITDA is down over 22%, and the margins are down very steeply, down 465 basis points on a year-on-year basis, coming in at 13.7% in this quarter versus 18.3% in Q3 of last year. Moving to Aadhar Housing, they've reported quite a strong set of numbers. The net interest income has gone up around 34% over the previous year, and the PPOP is also up almost 20% over the previous year, and the net profit has also seen an increase of around 17% over Q3 of last year. Lastly, we have Cochin Shipyard. Now, on this front, the revenue has gone up around 8.5% over the previous year, but again on the profitability front, they have underperformed. Net profit is down almost 30% on a year-on-year basis. Even the EBITDA is down around to 23%, coming in at 237 crores in this quarter, and the margins have seen a very big contraction of 866 basis points, coming in at only 20.7% in this quarter versus 29.4% that we saw in Q3 of last year. So keep your eye out on all of these stocks today.
Absolutely. Thanks, Ria, for getting us that update. So all of those counters will remain in focus, but in terms of what's in the spotlight as well when it comes to themes, there's of course capex and consumption that we've been looking at. We caught up with Sunil Kaul, who's the global emerging market equity strategist at Goldman Sachs, discusses the rationale then behind the likely portfolio shift when it comes to capex to discretionary, and his views when it comes to both of these themes. Let's go across and listen in.
We do think that on a relative basis, at a very aggregate level, you would see some outperformance from the consumption cohorts compared to the capex sensitive sectors. Again, within consumption, it's a broad category. Some of the discretionary consumption categories, I think QSR is a good example in point that could do well. I think there is a lot of focus on tourism, travel. I think that would continue to do well. I think footwear and some of the other discretionary categories, durables for that matter, also we think could benefit. So again, I think there are very pockets of consumption, discretionary consumption categories that could relatively do better compared to the very heavy sort of capex, government capex intensive sectors. We have been underweight cement, where we think, I think you still have sort of challenges in terms of competitive intensity, but also kind of some pricing pressure. So cement is something we have been underweight. I think infrastructure, within infrastructure, where we are kind of more neutral, we have pockets of the broader industrials, airlines as a case in point, I think, which could do well. But I think sectors like infrastructure are very capex heavy, railways, roads. I think they can underperform in the current context. If you just looked at the portfolios, right, over the last sort of 3-4 years, I mean, defense as a case in point, railways as a case in point, I mean, our sort of baskets or portfolios in those areas have run up like 300-400% in the last 3 to 4 years, right? And so I think what needs to happen is people will reorient some of their portfolios away from some of the very capex sensitive sectors, more towards discretionary consumption categories. There will be some sequential improvement in capex, given the underspend that has happened this fiscal year, right? So I think from a sequential perspective, you might see some spending coming back. But I think the broad point, and this is something we have been sort of saying for a while, is that gone are those days wherein you actually saw 30% plus capex spending during the last 3-4 years, and then the capex spending going forward will be more in line with nominal GDP, which is what we have been seeing in the last couple of years, sort of 10-11% in that sense. There has always been kind of premium valuations to Indian consumer stocks, I mean, compared to anywhere else in the EM. And at the peak, and many of these consumer stocks, you can't sort of broadly overgeneralize, but they were sort of trading at 50, 60, 70 times PE. Market itself at the peak in September, before we just downgraded it in October, was trading at 25 times, the aggregate market. From there, I think we have seen a decent pullback in the market, close to 15% plus. But when you look across categories, including in consumption, you've seen sort of 20% plus multiple deratings in many of these stocks. So our sense is that you're getting to a level in aggregate terms where market is getting sort of more fairly valued. I mean, within that, I mean, for the headline market overall, we've sort of gone from 25 to 22 times PE, and our sort of fair value target is more like 21. A lot of FII is still kind of engaged in the consumption story in India, and so it still will trade at a relatively higher multiple to the rest of the indices and rest of the consumer pack across the EM.
Right, so consumption clearly taking center stage over capex. This is what Sunil was also sounding like. It looks like a strategy coming in from Goldman Sachs. But moving on, let's get to the global stories very quickly. US President Donald Trump has signed an executive order imposing sanctions on the International Criminal Court over investigations of Israel. He has accused the ICC of engaging in illegitimate and baseless actions targeting America and its close ally, Israel. However, neither the US nor Israel is a member of or recognizes the court. The world warmed to yet another monthly heat record in January. This comes despite an abnormally chilly US, a cooling La Nina, and predictions of a slightly less hot 2025, according to the European Climate Service, with the average surface temperature to 0.79 degrees Celsius, which is above 1991-2000 January average.
All right, then time now to take a look at the political landscape in the national capital. Data from two of the most relied and trusted pollsters in the country is in Axis My India is projecting a BJP victory, and that too in a comfortable fashion as per the C Voter exit poll. The men in Delhi are propelling BJP to victory. However, the women of Delhi are still backing Arvind Kejriwal and the Aam Aadmi Party. Moving on, then the Union Cabinet chaired by PM Narendra Modi is likely to approve the new income tax bill today. It will pave the way for its introduction in the Lok Sabha as early as Monday. The bill is part of a broader push to reform the taxation system.
All right, with this, it's a wrap on this edition of Market Cafe. Looks like we are in for a minor soft start. 26 point is what GIFT Nifty is indicating. But then all eyes on RBI MPC outcomes. So stay tuned to ET Now for more updates.